Hello everyone and welcome to this Tesla Trading Monday video. And every Monday we look at the Tesla share price and see what an Uber bull who is strategically and long-term into Tesla would think about a short-term situation and the tactical trading opportunities in the stock. And if this doesn't make any sense to you because you think, oh, how can you be strategic and tactical at the same time? I'm following a specific strategy here where I'm all into Tesla. I think it's the lowest risk, most predictable stock in the market right now, at least for me. I see very little risk long term. And I have a stock price, share price of 10,900 by 2030. So that makes me very bullish. That gives me roughly 80% compound annual returns over the next 5 years. I don't see where I can get this otherwise with that level of conviction. But because we're all a little greedy, we try to generate alpha over a 100% Tesla portfolio. So if you go all in with your money portfolio into Tesla, is there a way to make more than that? And that's what we call alpha. In order to do that, we need to figure out how can we apply certain tools like leverage options, maybe leveraged ETFs, but be very cautious about that because that can go terribly wrong. I will go into that in a second. Now, before we go into that, just brief recap for all the ones of you who are new to this. Why am I so bullish? Well, there are a bunch of reasons. I go into that in my reality engineering video where I explain that Tesla leads the world in humanoid robots, but also in robotaxis, and has a very solid core business that basically finances with its profit all these great R&D endeavors to an extent no one else can afford, with billions and billions of dollars in profit that can be poured into the humanoid robots, into the build out of the supply chains, into making sure they can manufacture billions of those as quickly as possible, and basically saturating the new labor market that will open up once you bring down skilled labor costs dramatically. So these are all points why me and many others are pretty sure that Tesla is the safest bet for huge compound annual returns. So based on that, we are trying to figure out how do we generate alpha. So let's take a quick look at the stock to have a short-term analysis as we do here every week and see what we can learn. So let's start with a big picture stock inside here the last 5 years, just to always remind ourselves of the big picture. We see that in 2021, we hit this high here, and the stock went sideways for years and years and years, despite the company going through the roof in terms of growth and also technology advancements in Optimus and FSD, robotaxi. And we are right now here. So short term, how does this all look like? The last 6 months, just to recap that, here was the election, November 5th. There was a crazy run up, not in the large scheme of things crazy, but short term, you saw a huge run up from 260 to basically 460, 480. We peaked here, the week before Christmas, had the Fed announcement. I can zoom into that a little bit more, last 15 days, or let's say last month. Had the Fed announcement, and that dropped the market a lot. NASDAQ down 4%, and Tesla crashed a little bit here, went down to the 420s, and so on and so forth. And so today we are at 420 something, today on Monday. And the big question is, what does it all mean for those of us who try to generate a little bit of alpha above a full core position of Tesla? When we want to do that, it's very important to have some predictive capability into the close future. And I always put it like this: predicting long-term futures, like predicting where Tesla is going to be in 2030, is much easier, exponentially easier, than predicting where Tesla is going to be in 6 months, which is exponentially easier than predicting where it is in 2 weeks. It becomes close to impossible, of course, in the short term. But the better you are in short-term prediction, the exponentially more you get paid, obviously. Long-term, understanding Tesla, all you need to do is understand the basic first principles and the mechanics in our reality, and then everyone comes to similar conclusions. But in the short term, we need to dig a little bit into technicals and macro situations in the market. And the way I view it now, the big question we see asked by a lot of people is, what about this thing here, right? This line down here, the 420 line? And what about the 400 line that we see a little below here? Right, here's 400. Is Tesla gonna crash the stock? Is it gonna go under 400? Should we wait before we double down and all these things? I would say there is not a high certainty here what's going on, but this looks a little bit to me like there is a tactical short-term channel developing here, 480, 460. And you see that the stock, right now is a little directionless and goes sideways on a 2-week basis. And that it bounces off this resistance level, which makes kind of sense. It's the old all-time high of 420 something. And it's this 420. So my theory, and I'm not super confident about it, cautiously confident, is that for now, if there's no macro event, if the market doesn't tank too much, and if there's no fundamental news, which we always have to assume in the very short term that there's no fundamental news, the stock is likely to bounce around in this channel. And as long as it does that, it's a good time to apply a sideways strategy where we can just generate alpha by churning through some options premium, for example. And I will go into that in a second, how I do it. And you always be very cautious. Don't copy me. I'm just sharing this for those of you who are sophisticated with options to just share information. If you're not sophisticated, be very cautious. Whatever you do some paper trading before or start very small, because this is all very dangerous. And this is all based on a core bull portfolio of 100% Tesla, because I think that's the wisest way to go. Everything else is a little greedy and dangerous, but paid off so far. So if that is true, it bounces around here. What are the risks we are facing when we rely on this channel for now? Well, the risks we are facing are on the downside, the risks are, is there any macro situation coming up where the market tanks? And when I look at the market, I'm not too concerned, to be frank, right? If you look at the NASDAQ, for example, just to pick one, if we pick one here and look at how this looks like, this thing is actually behaving pretty cautiously, right? And you see the drops we saw on the NASDAQ, if that would happen again, in the S&P and the NASDAQ, the retracements we see, they're not crazy. I think that would be the equivalent of a Tesla 20% drop if there is a reasonable little correction. So I believe a reasonable assumption is for macro risk that Tesla drops 20%, which is 80 points, which is not crazy. So even if you would be 1.5x leveraged, you're not dead in any way. You can hold through this. So I think the macro risk is not super duper high, but I'm concerned about Q1, that there is a little bit of a volatility in the market. So we have to be cautious about that. So on the downside, it's all about watching out for macro and hoping that, there's no crazy black swan Elon event, which I don't see coming. On the upside, the risk is that we have an onslaught of catalysts coming. And the upside is, of course, also upside risk, right? Will it break through 480? We have seen on the 24th, Christmas Eve, what can happen. This thing randomly went up from 420 to nearly 470 in one day for no real good reason. There is a whole onslaught of little catalysts or big catalysts this week, end of the week. We have deliveries coming out, and Wall Street expects around 507,000. For Q4, Peggy, estimates 510,000, slight beat. I think it comes in somewhere around there. As long as this thing doesn't come in below 500 or above 520, I think the market will just use that to, validate the channel. If you're at the bottom, it says, oh my God, good news, it goes up. If you're at the top, it says, ooh, not so good news, it drops it down. So I wouldn't think that does too much as long as it's in this range. We have the Model Y Juniper scaling in Beijing, in Shanghai, in China. There's internal news that they're really ramping up the new Model Y Juniper production. So this thing is coming and could be announced and presented as early as next week, maybe even this week, who knows? So that's definitely a catalyst we have to watch out for. The cheaper versions, they could be now announced any week in January, in my opinion. And that could be a bigger catalyst And then we have, of course, FSD news that can break any day, a new update, licensing with OEM. So in short, why am I saying all these things? We have to be cautious when we trade Tesla, that there is an enormous onslaught of actual fundamental catalysts that are each becoming harder and harder and more important coming this year. So there's a constant risk for Tesla to actually get a catalyst that makes it break out to the upside. Okay, I'm saying that for any short call, covered call strategy that can bite you in the butt if you're not cautious any point in time. So now you know there's always upside and downside risk if you rely on these channels. So we have to be smart. What am I doing about that? So I want to share my current strategy. What is happening right now? What am I doing here? So this week, I decided to become a little bit more cautious. For those of you new here, I'm using this little model to explain quickly what the strategy is and why. So here is the situation, right? I put in here, I think the upper bound, I'm defining a bound. I think the upper bound is 480. I think the lower bound is 415. I'm cautiously bullish, therefore, at 421. I think the macro situation I put in danger. So danger means this could not hold if something happens and there is a risk of happening something happening in the market. And then this is the strategy. Let me explain. So this is a strategy that normalizes your portfolio to 1,000 shares core position. Some of you have 100, some of you have 10,000, some of you have 2,000, some of you have 500, whatever you have. This is just normalized to 1,000. So whatever you have, you divide these numbers if you want to see how that would look like with yours. So that assumes you basically have $421,000. That's your total portfolio. They're all in Tesla. You're 100% Tesla here. Now, on top of that, what I'm doing this week is I'm putting on a straddle. So what is a straddle and why? It's a little less risky compared to just selling out of the money puts and calls around the price. Because, let me explain this. I'm selling a 480 short put here, 15, just FYI. Calculate this based on this. I'm getting $61, so I'm getting $92,000 for that. And that means if Tesla goes up, I'm making good money here. But I'm putting on a straddle. So I'm offsetting that by selling short calls at 410. I'm getting $19. So if you do the math, that has roughly $8 of free money in here. And this has $2 of free money. So in short, I'm getting roughly $10 premium in there. So what does it mean? And I have 15 of those. It means if Tesla wouldn't move at all, I'm getting $15,000 end of the week. That's a lot of money. So if Tesla does not move at all, I'm getting $15,000. But because it's a straddle, as long as Tesla stays between 410 and 480, as long as it stays between these two, I am getting my money. So there is no real risk. It's either staying in that channel between 410 and 480. And in all instances, I'm getting my 15,000 or whatever it is paid out. Because I was right that this premium is wasted if you put in both the short put and call deep in the money. On top of that, just for fun, to make it more complicated, so here these long puts, you just need them because otherwise you're not allowed to sell these because you have margin requirements. And by buying a bunch of long puts at 370, you're buying yourself some margin buffer, right? So you're allowed to do that. So these are just wasted. So you're going to lose that money, 1,455, very likely. If you don't lose that, you have a problem because that means the stock dropped a lot. And then just for fun, because I'm remaining slightly bullish. So this is not a bullish strategy, by the way. This is a neutral strategy because it means as long as Tesla stays between 480 and 410, you just get your $15,000 end of the week that you can keep. If it goes to 470, you don't care, same thing. If it drops to 410, you don't care, same thing. So it's pretty neutral in that channel. It's only not neutral in the sense that it's at 421. So I believe it's more on the lower bound. It's more likely to go up than down. Okay. Just for fun, to give it a little bit of a boost and reflect the bullish sentiment, I'm also selling 5 out of the money puts at 410. You're getting free $3,900 for that. If Tesla actually stays above 410, you are getting this little bonus on top. because I think we are down here, it's more likely than not to go up, but I'm very cautious of the -5. So how does this all look like? Alpha simulation here. Here's my alpha simulation based on this setup this week. It means that, if the stock goes to 421, meaning it has no move, Tesla moves 0, stays where it is, you make 0 gain or loss on your Tesla core position, then this portfolio makes you 18,720 that you get for free. Very nice. If Tesla drops to 400, you're breaking out of this funnel, so you made a mistake here, then, Tesla loses 5%. So if you only hold 100% Tesla, you lose 5%. With my portfolio, you lose 5.29%, and you have a alpha of negative 0.3%. So you basically performed 0.3% worse than if you would have not done what I'm doing here. Okay, that is if it goes to 400. And what you see, interestingly, if it stays in the channel 410, 430, 440, just for fun, you always generate 4.45% alpha, including if it stays here. So you're getting on your entire money, on your entire portfolio, you're getting a free 4.4%. That's a lot of money, by the way, if you think about it, because that's in a week. So you do this for 4 weeks, for 1 month, and you made 20% alpha on your entire portfolio over holding 100% of Tesla. So that's why I like these strategies. Most of the time, the stock goes sideways. The key here is if it drops hard or goes up hard, that's where you have to pull the plug on these things. That's where this goes off the rails, right? So this is the danger. But if you do the math, you do this for 2 months and suddenly you have 40% alpha on your portfolio. So even if you lose 40% on your entire portfolio, if Tesla drops 20%, you are 2x leveraged and you lose 40, you would have offset that big loss just doing 2 months of that, as long as you're right. So being right pays off here. And I think that's a pretty conservative strategy. You have to watch out for what's happening to pull the plug if necessary. So I don't want to bore you too much with this, but I think all of you are interested in a little bit of trading. Over time, the way I view this is as a super big bull on Tesla. I'm not even thinking in money here. I'm thinking if you can afford 1,000 Tesla shares today, well, let's say 100, whatever it is, it doesn't matter. Let's assume you can afford 1,000 Tesla shares. That strategy allows you to basically move the needle up from 1,000 shares end of the year. If you have 50% hard alpha, you have now 1,500 shares. So alpha strategies allow you to actually not just accumulate money, it accumulates Tesla shares, and that's the currency of the next 5 years, in my opinion. Oh, that was a quick insight what I think this week and what I do. Of course, it can change any day. You have to really be cautious with these things. Let me just reiterate why we are having these trading Mondays. The rest of the week is much more strategic. I think trading is important because it allows us to generate alpha, but it's also a training and skill exercise for all of us who try this. Be very cautious. Again, let me repeat that. But it helps us to get more, knowledgeable and train our skills in understanding markets, macro events, bigger than Tesla events. It also makes us more sharpened in our senses. What are all these numbers about? Who's saying what? And were these people actually right or wrong? The more people understand Tesla, the more people capitalize on it effectively, the more all of us will win. Because being right about the future allows us to capitalize on the future. It allows us to become better reality engineers. And if we sync our information, our knowledge, we allow Tesla to do better things. We shared on X, we shared on YouTube. Tesla employees and Elon are going to read it. So all of us, the better we are in predicting and doing the right moves and deploying capital more efficiently, the faster we can generate the future. That's why I'm sharing this. That's why I want your feedback on everything, both on technical trading and on fundamentals and on macro and on geopolitics. And I hope, this is helpful. For the rest of the week, we will do non-tactical things. We will talk about this week about Optimus and geostrategy and politics on Wednesday. I have a great video coming up that talks about how Optimus is actually changing the geostrategic balance in the world in very dramatic ways. I will have a video coming up today or tomorrow about Elon's secret plan for Germany, because maybe you have wondered what's happening in Germany and why Elon is getting so much hate over there from the elites and mainstream media. Then we will also launch on YouTube the video that went out on X yesterday, why Tesla robots will eliminate all jobs except for this one, which is reality engineering. And another video coming up on Tuesday, tomorrow, is a video where we'll talk about who will train 10 billion Optimus robots. Because having robots is great and making them smart is great, but who makes sure they're skilled in these millions and millions of different jobs that Optimus has to do or humanoid robots have to do? Imagine a specialized factory in Japan and Tokyo, or specialized little factory in some German village, right, where they build some super specialized little screws for nuclear power plants. Who's training these robots to do exactly this thing? Tesla can't do it. And why would people train them? So this is going to be a very interesting video that explains the new ecosystem of humanoid robot labor and how we basically extract the IP of the entire world and put it into the Optimus brains, and how we make that an economy. End of the week, we are getting more strategic. It's about reality engineering, the 4 levels we can go through as people, how we reach personal escape velocity with Tesla stock and actually seize control over our own money and the returns. I want to go into different scenarios based on personal net worth and personal trading capability. So if this is all true, how do you actually get escape velocity with Tesla stocks? If you have $30,000, you can afford to trade with or invest. What if you have 100,000? If you have 400,000, you can buy 1,000 Tesla shares. What if you have 1 million? What if you have 5 million? So to reflect the different, types of views we have, and to allow everyone to make a smart strategy, how you get into a capital ownership position, or if you're already in one, what is the best strategy from there? Then we have another video coming up, why Tesla stockholders increase profit with reality engineering. So why should we listen to each other and really become good in all these predictions, from technical trading all the way to fundamental predictions? And then finally, there will be an update this week on my Tesla financial model. People want to see how I adjust my risk, because my model actually recognizes risk and quantifies that, and what the Optimus modeling exactly looks like. So it's going to be an interesting week. I hope to see you around. I hope that was helpful. Let me know what you think, and see you on X and on YouTube.